Welcome to KonichiValue 10 Fasts. This is the show where I put my guest in the hot seat for 10 super straight to the point questions. And today I have Michael Fritzell with me. Now, Michael, true to brand of this fast-paced podcast, I actually wrote a short intro for you in third person. So please, let me read it to you before we start. After 16 years deep in the institutional finance world across London, Shanghai, and Singapore, Michael Fritzell stepped away to launch Asia Century Stocks. It has since become an absolute go-to for independent equity research. He is the smartest guy I know when it comes to Asian markets, delivering the kind of raw, ground-level macroeconomic analysis that big banks usually charge tens of thousands of dollars for.
Thank you.
And also, it's a good time to have a disclaimer here and just say that any stocks or any investments we talk about are not financial advice and it's for entertainment purposes only. So, are you ready? Are you ready
Sure.
for the hot seat, Michael?
Please.
Okay. Well, let's start strong then. So, question number 1. If you had to lock your entire net worth in just one Asian country for the next 5 years, where does your money go?
The single country that's most interesting right now is South Korea. And I know you're based in Japan, so you've seen what's happened to the reforms that took place since 2023. And Korea, they're almost copying the same approach that the Tokyo Stock Exchange has taken. And I think this is underappreciated. All eyes are on the KOSPI, which has obviously rallied because of Hynix and Samsung Electronics. But there's so much more beyond the KOSPI. And I see significant value across the small cap space. So it's 2,000-3,000 stocks. They are significantly cheaper than all other developed markets. And there's been a significant, I think, reforms, the biggest of which is the introduction of fiduciary duty of directors in mid-2025, where directors are now responsible for all shareholders' interests and not just controlling shareholders, which has basically made it very difficult to do any related party transactions. So that's been a big shift, and I think minority abuse is getting less common. There's also been some shifts in the inheritance tax regime. You know, like in Japan, you pay inheritance tax in Korea, and it's based on the market value of the shares. And they're trying to reform that a little bit, perhaps on the margin. They're also reducing dividend taxes for high dividend payers. So it's really exciting. And I think just like Japan has had this activism industry, like shareholder activism has really blossomed over the past few years, Korea is in the very early stage of a similar industry coming out. And we've seen capital like asset value investors and Dalton and Oasis, all sorts of firms are moving to setting up offices in Seoul. And I think we're going to see huge number of shareholder activist campaigns. And as a minority, this is super interesting because you can just piggyback on them and hopefully unlock value in a lot of these family-owned companies, which have really been moribund in terms of...
Wait, so if I get you straight, it's basically, so you would put all your money in Korea for the next 5 years, but not in the biggest stocks, so not in the KOSPI index, but more like in the lower side?
Exactly. And I think it's this very frustrating habit that people have. They look at the index and say that this is representative of the market, but it totally isn't. Like KOSDAQ, for example, which is more tech-focused index and market, it's barely up for the year, whereas KOSPI is up. I don't know how it is now of the last day, but almost 100%. So it's completely different. And the rally has been driven by AI capex stocks, and especially the memory chip stocks. We've seen a squeeze in DRAM prices, and those are not sustainable, I don't think, longer term. So I would never buy the KOSPI right here.
Well, we're going on to question number 2. What do you think is the absolute dumbest value trap that Western investors keep falling for in Asia?
The biggest issue is that people do not pay attention to the character of the people who are running the business. Like, you can literally go back to the history of what they've done and look at the capital allocation. Like, are they actually paying out dividends, or are they buying back shares, which are obviously shareholder friendly, or are they engaging in sister company transactions? Do they have a complex corporate structure? Like, you can, or do they have they issued shares in the past? Dilution. There's been a huge number of issues that can arise but you can just look at the history. And I think in Asia, or really anywhere really, you can't rely on the legal system to protect you that much. It's at the end of the day, if people want to cheat you, they can. So it's about the character of the people involved. And you got to do that analysis by looking at people's track records. This is all public, you know.
Just so I get it, like, so you're saying, I'm a Western investor. I don't know that much about Asia, but I've heard, wow, Korea has all these cool companies, whatever. Indonesia is super undervalued. So in the West, I would probably look at the dividends, etc. ROI on a company, and then say I invest or not. But you're saying in Asia, you have to look at interviews, or how do you look at the people?
For example, I covered a Korean stock recently. I presented it at a conference in Hong Kong, and the founder he's a fantastic businessman. I mean, the business itself is doing really well. High margin business, growing, but he never paid out a single cent. And so if you see that, it's a value trap, right? So 60-70% of the market cap is cash. So he could pay out a huge portion of market cap, and you would get a massive special dividend, but it's not going to happen, right? So it's completely irrelevant what the market cap or what the cash position is, because he's not going to pay it out. But now his son is getting involved in business, and he, for the first time ever, instituted a dividend. He started a share buyback, 2%, back in March. So it's the character of the people who are actually getting involved in business. And when the son takes over, he's an ex-investment banker. Most likely, he will start to pay out some of the cash.
Question number 3. I think Tokyo is objectively one of the coolest and best cities in the world. But even so, there's not that many expats here. I mean, people flock to Singapore, is probably the best example of an expat city in Asia. And I just want to know why you moved to Singapore instead of Tokyo. Like, what would make you and people like you move here instead of Singapore?
There's a perception that the hurdles are lower in Singapore. People call it because it is fairly comfortable. They've great at marketing. I mean, the government they're sponsoring. I think they paid part of the production cost of the video of the movie Crazy Rich Asians, and there's a reason for that. I mean, it kind of builds the brand name. So Singapore has a great brand name. And of course, it's not like I've completely integrated into Singaporean society, but it feels like easier, perhaps, than Japan.
So, like, despite it, not being as international as Singapore, if there was like a golden visa and some tax benefits for expats, you think a lot of people like you would move here instead of Singapore?
Yeah, I think so. I think Japan has a good vibe. There's something about people's attitudes. Maybe they're relaxed, or happier, maybe more content. There is a difference, and that really attracts me. I think Japan seems like an amazing place to live, frankly.
Question number 4. So, as you know, Japan has a rapidly shrinking population, and as you probably heard, the country is getting tougher on immigration. So my question to you is, do you think Japan's GDP overall is going to be higher or lower in the next 10 years?
I think Japan is probably weakening a bit in terms of its competitiveness, because the Chinese government is supporting exporters, and they're doing well. So a lot of these markets, like previously dominated by Japanese companies, have really controlled the export markets in emerging markets, specifically like Toyota and the Daikin and so on. There's just so much competition across the board, and many of these leaders of especially private companies in China, they're very young. Like, I don't know how they are, 40s maybe. Young people, hungry. So I can definitely see continued market share loss, and if you compare the relative GDP per capita, I can see them continue to lose a little bit. I would love to see more entrepreneurship in Japan. I think there's been many cases of younger people taking over and companies just being revitalized. Like Sanrio comes to mind, but there are many of them. And I think that's really what's needed. You need someone who's young, who wants to get rich, who has a family to support, someone who truly cares, rather than living on past merits and thinking backwards rather than forwards. But in the more in industrials or other sectors, the big companies, the most successful companies, are really older
Hmm.
companies that were formed in the the 50s and 60s, like Casio and Sony. I would love to see a Spotify, pop up in Japan, but not many such examples.
Well, we got to go on to the next question. So, if you think about a country's economy, who is the single best leader in Asia, both past or present?
You're talking about political leader?
Yes.
It's that's a very tricky question. I think Deng Xiaoping, he did huge service to the Chinese population, and taking China from a very backwards place. I think we can say that. People, of course, have tried to change history, but it was rough in the 1960s. But history hasn't ended yet, and I think China is still a communist country, and we don't know where it's going eventually.
But over to the next question. So, question number 6. There's a global AI race going on, if you have caught that. And when it comes to the end product, everyone is talking about the US and China. And the rest of Asia is basically the hardware hub if they're lucky. Do you think that there's any other Asian country that can play in that game, that could create the next Grok or the next DeepSeek or something like that?
I'm a little bit surprised, frankly, because these software is supposed to be commoditized, right? So why can't these models be copied as well, like with enough money?
And why isn't anybody trying?
China has the capital. I'm sure there's a great resources being spent on trying to keep up with these American large language models. I don't see much differentiation between them. There are some switching costs, of course, that are built in, but those are not fundamentally to do with the models themselves. So to me, this is not going to be that much of an issue. Large language models will exist, and people will probably just default to Google, and that won't be much of a big deal. They're going to get commoditized. The problem with new technologies is if there are many substitutes, you don't get the pricing power. And in large language models, I don't see a huge differentiation between Gemini versus ChatGPT. I mean, there's some, but eventually it's going to be almost none. Same thing with DeepSeek and so on. So people are going to default to the cheaper ones, Google or the Chinese. So no, I don't see any other alternatives outside of China, but I don't think that's necessarily a huge issue. Google will just kind of continue to dominate, and people will stop thinking this is a massive revolution at some point.
Oh, wow, that's interesting. So basically, that the rest of Asia isn't gonna create the next DeepSeek because it's gonna get commoditized, and they'll just use the biggest and cheapest model. So question number 7. We both come from Europe, and now we live in Asia. And so I have to ask you, do you think Europe has a future? Do you think that Europe can catch up with Asia in manufacturing and other areas that are growing rapidly? Or is it destined to be run over by the rest of the world?
No, I think nothing has really changed. I mean, the only thing that's really changed over the past 30 years is that China has really upgraded its technology, outsourcing. MNCs have put their factories in China, and this technological know-how has been copied, and now you have Chinese companies that are basically outcompeting the companies that used to have factories in China. That process have more or less ended with like FDI has actually started to come down quite significantly. So maybe that spillover of tech know-how is maybe slowing down a bit, but that's really what's hurt Europe the most. It's been a manufacturing superpower in the past, but it's no longer the case. And the US has also been hurt in terms of its manufacturing. Also China has taken market share, as well as East Asia before that. Otherwise, I think there's entrepreneurship in Europe that is quite vibrant, especially Nordic region. And I think also when it comes to China, Xi Jinping, the general secretary, since 2012, he is a Marxist, he's a Maoist. He doesn't believe in private sector entrepreneurship. He sees the state owning the productive forces of the economy. So what does that mean longer term? I'm not sure. I think Europe will do fine, probably. Yeah.
So it will be more than just a museum for rich people to go and visit to see all the beautiful monuments that once existed.
An ACLS museum, but
Yeah.
it's just so stupid. Culture wars are started on social media, perhaps on purpose. Perhaps they're amplified by certain countries like Russia or China. I'm not sure. Perhaps it's just pure stupidity, or perhaps it's just the stock market environment that we're in. Like the US right now is a very hot stock market. Back in 2010, 2011, everyone was asking themselves, well, the US has debt problems and it's probably going down because of, it's losing its shirt to China. The narrative changes, and the narrative about Europe could easily change as well. Like, when people talk about Europore, that's a new phenomenon.
Yeah.
Like just looking at Sweden, which is of course the country that I know best, and they're doing just fine.
Yeah.
And every time I go back there, I was back there last week. I mean, living standards are amazing, and so you go there and you realize, wow, the perception of Europe is just so off base that it's a little bit concerning, but I think these misperceptions will probably adjust over time, will disappear over time.
I agree. Okay. Question number 8, Chinese stocks. A lot of super cheap companies are there right now. Do you think they're uninvestable or the bargain of the decade?
Over long term, you're better off investing in countries that really protect minority shareholders. The penalties for wrongdoing in China are minimal for cheating foreigners. The indices have performed poorly, like the K-Web, for example. The Chinese Internet Index is like flat for 10 years in a massive Nasdaq bull market, which is I think is up over eight times. That is highly concerning. CSI 300 is flat over 35 years, which is just remarkably poor, and it's not due to the poor performance of companies. They're actually doing very well. It's due to dilution and poor treatment of minorities. So I'm not super enthusiastic about stocks in China. I think there are exceptions like Tencent and NetEase and so on, not investment advice, but they treat minorities pretty well, I think, buying back shares and so on. So you can do well. Like just at this very point of time, Chinese equities have become out of favor because of the AI boom. I'm talking about the Hong Kong listed, foreign listed stocks. The platforms have become out of favor. So yeah, maybe they're worth buying. Maybe. I think as a foreigner, you're more exposed, but there are southbound flows. So maybe Hong Kong stocks are okay. Like, would they cheat their own population as much? Maybe less so. And the A shares market is mostly domestic. And even countries like Iran, for example, which is a very repressive regime, they have a stock market. They've had a stock market for decades. It's still there. So my base case is that even though XE is not particularly market friendly, I think the stock market will continue to exist, and the Asian market is probably safer. So I don't think it's uninvestable. And if you're mainland Chinese, you can't get your money outside of China, of course you invest in the local market because you got to protect your savings somehow through some kind of inflation hedge.
Okay, moving on. Question number 9. Which Asian country market would you absolutely not touch right now?
That's I don't think there's any. I think I'm flexible and I'm a stock picker as well. So
You're a brave
it would be a
man.
little bit too harsh to say that, but I do think India, I don't understand it. Like, I don't understand the valuation multiples. They're very high. Like consumer stocks is just so far out of the norm. So CAPE ratios, if you look at them, CAPE ratios globally, cyclically adjusted P ratios, you take the 10-year average margins for companies, and obviously Modi has done great things for the country. It's moving in the right direction. Entrepreneurship is great, but for the most companies are just so highly valued. Consumer stocks 40, 50, 60 times PE. And I don't think that they're necessarily worse managed in the Philippines or Indonesia. I think they're probably pretty similar. But in Indonesia, you paid 8 times PE.
So would you say then that the Indians' governance structure, laws regarding shareholder interests, etc., are just as strong in other countries like Philippines or Indonesia? Like India doesn't hold any strength there?
I think there are talented management teams. I think I haven't spent much time investing in India, but I hear management teams are excellent, and I think they have treated minorities pretty well too. Frankly, it's one of the emerging markets that performed the best over like 30 years. To what extent that it reflects high valuations is unclear. Yeah, maybe not. At the end of the day, these are emerging markets. You got to be careful of being swept up in the stories that always occur cyclically. Like I've seen cycles come and go, and I tend to like take the other side when a market becomes too extreme, because I know that nothing is ever perfect in emerging markets and nothing is never completely atrocious either. You got to take the middle way.
Well, moving on. Question number 10, and this is a personal question. Your platform is named Asian Century Stocks. Why?
I'm not sure, frankly, but economists, they had this beautiful map where they showed how the economic center of gravity has moved over time. And of course, Europe was, the center of the world GDP-wise in the around 1900s, moved to the US, and then it came back in the 50s and 60s towards Japan and Korea and Taiwan, and still moving. That spot, that center of gravity, is still moving towards Asia. And I think there is a case to be made for the fact that as long as there's entrepreneurship, you have this highly educated population that's extremely hardworking, intelligent, and if you read books, I mean, if policymakers are well informed, like they are in India and to some extent China and in Taiwan, Japan, Korea, they will figure things out. Like this is like the super long perspective. So I think you can make a case for salaries being materially higher in Indonesia, Thailand, Philippines, and so on.
So in a way, also because this is where all the people live. So naturally, if these people become more entrepreneurial, generate more money, this will truly be the Asian century.
Absolutely. I mean, this is just undeniable. You have huge populations, and culturally, like they will have an impact on the world, especially if you start to see cultural exports and so on.
Okay, we'll come to the final question. You have to nominate Asia's finest. That means anyone that's alive right now. It can be anyone, investor, inventor, politician, CEO, whatever. Just the one that you think is the most interesting business person in Asia.
I think this maybe, colored by the current AI boom, but I think Maurice Chang from TSMC, he is a force, like it is a $2 trillion company based in Taiwan, of all places, a small country, 22 million people. It's just remarkable. Like not even mainland China has a $1 trillion company, and this is based in Taiwan. He created this, like he's the founder, and not only did he create it, but it was revolutionary at the time because TSMC it pioneered the independent foundry model, whereas in the past these integrated device manufacturers like Intel, they would create their own chips, and that had its benefits. You maintain intellectual property control, but I think what was revolutionary about TSMC is that they were independent party to their fabless design companies in the US and elsewhere, and that enabled them, gave them flexibility, gave them high return on equity, and it also enabled TSMC themselves to invest a huge amount of R&D and kind of becoming a dominant force in the independent foundry industry. Not to say that they will always dominate. I mean, they made a big bet on EUV machinery with Apple in the 2010s. But still, I mean, this is Maurice Chang's creation. I don't think they will necessarily do as well in the future. Much of their success is because of him. And I mean, what is there any better measure of success than the market cap, $2 trillion, still trading at 22 times PE? It's just remarkable. And hope to see more leaders like that.
That is a really good nomination, I think. And I agree. He might be maybe one of the most, or if not the most important man for Taiwan and its existence today, I feel like. Well, thank you. It's been a pleasure to have you here, and I hope you like answering all these questions and that you don't regret saying anything in this podcast.
Thanks so much for your
And
input
other than
today.
that, yeah, I just want to wish you the best of luck and hope that we talk again very soon.
Sure, look forward to it.
Thank you.